Bill Ackman just sold all of his Lowe's stock after holding the stock for years. The interesting question is, why? Well, one reason I think I stumbled across in an interview conducted by the CEO of Middlefield, Dean Orico, a real estate expert, interviewing Mark Kenny, the CEO of CapREIT, which is Canada's largest residential REIT of apartment buildings. Here's the clip from Middlefields Youtube channel, and I have the link in the description below for the full video, so do watch the video and subscribe to their channel. So this video has many insights into the state of Canada's real estate market and the housing crisis.
Let's talk a little bit about costs. Inflation is this buzzword that's been around now for the last couple of years. What kind of cost inflation are you seeing in your business? We saw it, in 21 and 22, more in 22. Is that starting to plateau now, Mark, like it is, in the CPI numbers that we're seeing, like yesterday?
I'd say on the general inputs, yeah, we were seeing a plateau there. It's leveling out. I think in the case of CapREIT, though, now we're going to get a little bit tricky in trying to understand what's going on. I think it's simple. We're having trouble telling investors. Because the market is so strong, because we literally have a lineup of people, we've stopped our improvement programs. So our suite renovation program is the big one. Traditionally, we were doing $25,000 renos to get a market rent. Today, we don't need to do that to get a market rent. Mm-hmm. And the result of that is we're capitalizing a lot less, but pushing like basic repairs and maintenance through our income statement.
So you're still doing all your maintenance CapEx. It's just this enhancement CapEx that you're foregoing because the returns don't necessarily support it.
A dollar is a dollar. And what I say to the team, I don't want anybody ever thinking in terms of, well, how does this income impact the income statement? No, make the right decision.
Right.
So it's 100%. So you look at our CapEx spend, it's going way down. It's going to go down even more as we put these new buildings into the portfolio, but it's going way down. But at the same time, there's a moderate effect on our overall expense margins. And so we're still growing NOI margins, which I'm thrilled with because we've got new costs on the repairs and maintenance side of the business, but none on the in-suite capital, not none, but highly reduced investment there. That's good for business.
Right.
So the CEO made an interesting remark that they're not currently employing their old strategy of buying lower quality buildings and then doing renovations on them to increase rents, or renovating units that they currently have to get a higher rent from the market. So whenever a tenant moves from a building, due to the lack of supply and insane demand, they can increase the rent to match the market rate on the new tenant without spending money on improvements or renovations. I think this not only affects apartment buildings, but homes as well. Why renovate your kitchen or bathroom in a house if it won't add value to your home when you sell it? They also touched on many more points as to why we have a housing crisis in Canada. Canada has tons of land, but municipalities are broke, and you can't build infrastructure onto empty lots. So you could build a home in the middle of nowhere, but without running water or electricity, that's not a possibility. It takes 20 minutes for a family of 4 to enter Canada from the airport and 7 years to get a home built for them. The Canada Mortgage and Housing Corporation says that we need millions of new homes by 2030, but since there aren't a lot of new constructions going on, the CEO of CapREIT believes that really isn't very likely to happen, and the supply problem could last for the next 2 decades. So because apartment buildings and even detached housing doesn't require the owner to renovate the unit, it means that places like Lowe's and Home Depot are going to suffer from that, because if customers aren't going to come in for renovations that are unnecessary and discretionary, it means that the business is really only going to maintain, business for people that are doing basic repairs and mandatory maintenance. And if there are no new constructions, that can really hurt their future prospects for earnings. And another thing about Lowe's is they did sell all of their stores in Canada at a massive loss, possibly due to the current state of the Canadian real estate market. Lowe's and Home Depot are trading at seemingly low and fair prices, but due to the uncertainty in housing affordability, I'm personally staying away from these businesses as I think their futures are far too unpredictable.